In this video, we will use our 5-step approach to do our technical analysis on Bitcoin's chart in a new time frame. We will analyze trend direction, volatility, trend momentum, patterns and support and resistance lines, and volume of trades. Hello everyone, welcome to the channel. In this video, we update our previous long-term price prediction for Bitcoin in a shorter time frame. For more insight, I recommend you watch the in-depth analysis that I have already done on Bitcoin's development process and also its price. So make sure to watch that if you have not. Now let's have a quick review of what happened. Bitcoin price dropped below the trend line to test our support zone at 40,000 to almost 44,000. which consists of the psychological level at 40k, our support box, and the golden pocket. While the price is inside this zone, we can't easily call it the support zone, especially after that week under 40k, we may be able to call it the uncertainty zone. Now let's begin our 5-step technical analysis on the weekly time frame. And before that, step 0. As you remember from the previous analysis, step 0 is removing all possible bias ideas as much as we can. So we remove these lines, and if they are significant, we will find them again. Step 1 is trend direction. Just like previous video, to analyze the trend direction, first we check the structure. We have this low here, this high, this higher low, this higher high, and right now the price has made a low which is currently at least equal to the previous low. This means the uptrend is finished on the weekly time frame now, but the downtrend has not begun, so we are in a sideways movement. Next, we check moving averages, and the expansion towards up has stopped. They have not formed a fully bearish pattern yet, but the price being under all moving averages is not a good sign for sure. But historical data on Bitcoin's chart shows both a fast recovery and a long period of stagnancy or bearish movement are possible. The exponential moving average ribbon is contracting downward, but not flipping places yet. Considering how similar our current condition is to 3rd week of July, there is still some hope to see a fast recovery, but we should wait to see the closing price of the current weekly candle. Step 2 is volatility. To analyze the volatility, first we check the Bollinger Bands. Price was recently pushed down from upper band past midline and is very close to the lower band. Historically, on the weekly time frame, the lower band has acted as perfect support, so we may see bounce back soon. There are different methods to use Keltner channel. Unlike Bollinger Bands, the Keltner channel's main method works in a strong trend better, but in step 1 we understood that currently price doesn't have a strong trend, so some traders may use its bands as support or resistance lines. And how currently this tool cannot give us enough insight. Step 3 is momentum, and we are going to analyze RSI for that. Although the historical overbought area for Bitcoin on weekly time frame has been around 80 and higher, recent rejection at 70% shows the recent uptrend has not been strong. Currently, RSI is under 50% level, which will act as a resistance now. In step 4, we search for patterns and support and resistance lines. First, we have a trend line, a support box at 28k to around 30k, another box of support and resistance where the price is now between 40k to almost 43k. A resistance line at around 53k, a resistance line at previous all-time high at around 65k and the current all-time high at around 69k. We also pay attention to psychological lines at 30, 40, 50 and 60,000 levels. 30 and 40 are already in these boxes. 50k is less important than the 53k line, but we see some data point at 60k level. We consider moving averages as support and resistance lines, and the price is currently below all of them, so some resistance may be seen at these levels. Also, the EMA ribbon has almost the same situation, and the first one to pass is around 44k level. Volume profile tells us we have 3 clusters of trading activity, one at 34k, another one at 48k, and another one at 57k. During the Fibonacci retracement, let us first remove some of these overlapping lines to make it cleaner. The price has respected all levels, but unfortunately it is below the golden pocket right now, struggling to break above it. If not successful, it will be really bearish because the current weekly candle can be assumed a pullback before continuing the downtrend. The head and shoulder pattern we may hear about looks a little biased and even can be part of market manipulation, especially considering the previous one. Before we finish this section, just a reminder that some traders may pay attention to gaps in the chart, something we don't see in our regular charts because the crypto market is a continuous market that never sleeps and is never closed. So to find gaps, we should use charts like CME. We may see gaps in the weekly time frame and more frequently in the daily time frame because of the time gap that exists in trading. It is said that price tends to fill the gaps. On the weekly chart, we see a gap between the 3rd and 4th weeks of July at around 33k, and another one between the 3rd and 4th week of December 2020 at around 24k. But I prefer not to pay attention to gaps in this market. Step 5 is volume. Volume has not changed too much, so we don't have too much data here. But considering our current situation, that may be the calm before the storm. To wrap it up, we are going sideways, and while RSI is giving us some bearish signal, Bollinger Band is providing a little hopium, especially with the current price situation and patterns. The best thing to do now is to wait to see if the price escapes the golden pocket towards up or breaks down the 40k level. So if the bearish scenario happens, the first support may be the trading cluster at around 34k, which may not hold the price enough. So the last defense at support box around 28k to 30k will be the best place to buy as much as we want. Some people may want to benefit from short position before that. But if the bullish scenario happens, the first resistance line will be an area around 48k, which is the 50% of Fibonacci retracement and a trading cluster at the same time. There are multiple levels from the both simple moving average and exponential moving averages that may act as resistance, but the most important one will be the one that conforms to the 48k level. Next important level is the 53k at 38% of Fibonacci retracement and the local resistance. So now we have some ideas for our entry and exit levels or take profit and stop loss to manage our risk based on our personal risk tolerance, time frame, and trading style. Now we will check the shorter time frames. Make sure to subscribe and hit the notification bell and all to be notified about upcoming analysis.